Well, thank you so much for joining us today. I'm Marlon Bowling with you, your tour guide to the ag commodities. I want to welcome aboard our guest, Brian Hoops, the president of Midwest Market Solutions. He is based in Springfield, Missouri. And Brian, I see where we have more overnight export sales business this morning, but it's not soybeans this time. A little unusual here. Let's take a look at what we have. USDA said over the weekend, we actually sold a little bit of corn, and it was to Mexico. It was 159,000 tons, and that was it. No mention of soybeans or wheat or anything else. So we'll have to deal with that here this morning. Brian, you and I were talking during the break right before we came on live here about the gyrations in the overnight trade once again. It's getting to be old hat here. Let's take a look at where we finished up with our quotes provided by bar chart here. We'll go to the corn first. And on the corn, look at where we finished up. We had the May contract at $7.52 overnight. Well, that would be down 10.5 cents, but we had a high of $7.67.5 early in the trade. So everything kind of fell apart after that. We lost over 15 cents off of that. December corn down 3 3/4 at $6.51.5, and that would be 6.5 cents off of its overnight high. Meanwhile, in that soybean trade, we had the May contract maintaining a gain, but it was only a half cent. It closed at $16.76.5. So that would be off of its overnight high by almost 20 cents. And we had the September down a penny and a quarter. Let's go ahead and check out that new crop November contract and see what it did. Well, we had it finishing at $14.85 and a quarter, and it was actually down by 5 3/4 cents overnight. Now let's check out the wheat market. This is the one that really caught my attention this morning because when I went to bed, I think it was like 24 cents higher or 22 higher, something like that. And now we have the May Chicago wheat 35 3/4 lower. What the heck? We had a high of 11.32 and a quarter last night, and now we're at 10.70 3/4. Off of that, we had like a 64 cent trading range, I believe, overnight. And we had July down 33 3/4 cents. If you look at Kansas City wheat, we had the May contract with a high of 11.16 3/4 in the early going last night, finished almost on the low, only one tick away from it at 10.56.5, down 32 3/4 cents. Well, that wasn't a big about face overnight. In the spring wheat trade, you had the May contract down 23 3/4 at 10.46.5, only 2 ticks from its overnight low, and off of its high of the evening trade by almost 40 cents. So, Brian, what did you make of that type of whipsaw action there?
Yeah, good morning, Marlon. Some real volatile action coming in overnight. There's been talks that Russian wheat is starting to ship out of its ports once again. That's putting the pressure against the wheat market overnight and dropping values here. The export sale that we saw this morning for corn should be a supportive feature. We saw one sale last week and again to start off this week. So our balance sheets are tightening for both corn and soybeans. That means we're going to need a few more acres planted this spring of both corn and beans to provide that cushion that we need for this growing season. With demand increasing, we need better yields and bigger yields, more acres being planted so we can build up our ending stock. So that's something that the trade will be factoring in here as we get into the end of the month. But NOPA crush report out tomorrow. That is expected to be slightly friendly for the bean oil market, which is down overnight following the lead of crude oil. So that crude oil being down, making some new lows, lowest level since March the 1st, probably going to be a little bit of a drag to the corn and the soybean oil in early dealings anyway, unless crude oil can mount some sort of recovery later during the session.
I see overnight where on the news wires there was an update that Brazil's soybean harvest is said to be about 2/3 done already now.
Yeah, so, the yields came in a little bit worse than expected in northern Brazil, but they moved farther south now, and yields are back to near expectations. So weather will be less of a factor on the soybeans. In fact, rain there would slow the harvest down, but it is needed for that second crop of corn that's being planted after the soybean harvest. So, that crop will be closely watched. It's going to need some moisture as it's been very dry across a lot of areas recently, drought drought has intensified. But it really, in Argentina and Brazil, I think the weather has gone back to maybe a little bit more of a normal pattern, which is why we're not hearing a lot of talk about additional crop losses. The yields have come in, as I said, a little bit better than expected in the central regions of Brazil.
Okay, we'll come back and talk about the open for our livestock trade in just a moment. Our guest, Brian Hoops. We'll be right back. All right, let's go back to Brian Hoops of Midwest Market Solutions and talk a little livestock market activity. If you check that livestock summary from last week, Brian, we had cash cattle trade that generally was at least a couple of bucks lower across the plains. Do you think they can improve on that this week?
Yeah, it was something that was a real disappointment last week. $2 to $4 lower on a dress basis, and that $1 to $2 lower live. It's something that I think we can start to gradually improve on as we go through the last couple of weeks of the month of March. We'll get away from some of these captive supplies, but we need to get slaughter levels back above 650,000. We were at 644 after a very slow Saturday slaughter. That was below the prior week, below last year's numbers, and I thought it was a disappointment. I thought we went into most of this week being above last year and the previous week's slaughter pace, and we could not sustain that. So yeah, disappointment. I thought as far as the slaughter pace, steer weights did come down last week, a couple pounds. We need to see them drop a little bit more. We'll get a little bit more aggressive with some marketings through the end of March. We can kind of get caught back up and put a bottom in this cash markets, which will help the futures. And we're starting to find some technical support. Hopefully we can build off of that and see a rally to begin the week and into the middle of the week as if we get stronger cash markets.
What do you think it was that contributed to that lower slaughter pace?
Well, yes, the Saturday slaughter was the one that kind of did us in. We only killed, I think, 38,000 on Saturday. That was a real disappointment as we were on pace to be well above last week's and last year's levels, and we just couldn't sustain that on a Saturday. So maybe it's a situation they couldn't find enough workers or they didn't want to pay the overtime, but whatever it was a Saturday slaughter that slowed us down, and we're looking for a rebound in that slaughter pace, get back above 650,000 head killed.
One has to wonder if the weather might have had something to do with that, too. We'll have to wait and see. The April live cattle finished last week $1.40 higher at 137.30, but all the other months were only about 40 to 50 higher. Heading into the weekend on the feeder cattle market, you had April up $1.72 at 157.97. Biggest gainer was the May, and it was up 192 heading into the close Friday. On the lean hog trade, you had the April up 262 at 102.72 as it came roaring back. And the May was up 277. June on out, everything was over $3 higher. It'll be interesting to see if we have follow through on that one here this morning. Well, thank you, Brian, for helping us navigate the waters. Appreciate it. And we'll talk with you again real soon. Brian Hoops, Midwest Market Solutions. Janet, back to you.